Knowledge work is in jeopardy.
Every company's website probably says AI.
Yeah, so I don't care about your AI feature.
Healthcare was about 9 to 10 trillion.
Please give me a call. I want to invest in you.
They are general purpose right now.
You're cooked. I've been a lifelong dinosaur nerd.
If you're interested in robotics,
That's good labor replacement math.
because I think our history will probably fail us here.
Bad leadership is a sufficient condition to fail. You might have all the other things, but bad leadership in that startup. Right now, my brain's split across really kind of three big projects. So I feel like I'm putting about 4 hours here, 4 hours there, 4 hours there on average.
How many hours do you sleep? Do you think that the 6 hours or 8 hours is a good ideal amount of time?
I'm at least 7. I'm a sleeper. Doesn't
7?
work. Wheels fall off if I don't get my sleep.
Yep, yep. I think 8 hours. For me, I think 6, 7 hours. I think the efficiency kind of goes down.
It does.
Yeah, I think 8 hours with some coffee is the
Yeah.
right amount of sleep. Yep.
Yeah.
Yep. Okay, superb. Let's get started, Chin. So, what was Shane like as a kid? What did you like to do? What were you as a kid? Because I believe that whatever you kind of do in your childhood kind of shapes who you are when you become an adult. So, what were you as a kid? What did you like to do? What interested you?
Yeah. So early child. So I've been a lifelong dinosaur nerd. So like the thing that goes back the furthest. Like, I'm a child of the 90s. I was a little kid when like Jurassic Park came out. I still like, if something gets published in New York Times, Wall Street Journal about dinosaurs or paleontology research, I still dive into it. And I love it. I think like the coolest thing about dinosaurs is the time between the first dinosaur and T Rex is longer than the time between T Rex and us. So when you think about this, like over 100 million year period and how much the planet and the species on the planet changed, I think it's just a super exciting thing to think about. And what's so cool is like we just have these like little snapshots. You dig up a parking lot in Indiana and you find a new fossil, and you have to just totally reshuffle the cards in terms of our understanding. I still love that. So the earliest kind of I guess biographical signifier would be like dinosaur nerd, and I think the nerdiness has stayed with me through most of my life.
Why dinosaurs? Any specific
Yeah,
reason?
so my uncle, I have an uncle who's an artist, and his specialty is dinosaurs. He would call himself a paleo artist, I believe. And so he worked for American Museum of Natural History when I was a kid in New York City. And so I was like 4ish years old and was able to like go and see like the behind the scenes stuff. And that's really where it started. But yeah, I mean, like nerdiness and dinosaur nerdiness has stuck with me a long time. But if we're going to kind of talk about like formative childhood experiences, athletics and specifically football were really big for me. So I was started sports young, but didn't really kind of find my space until I started playing youth football. I'd say that was about like 10 years old. Played all through high school and then through college. And I think that whenever if you're an athlete, if you got the athlete DNA, I think that implies a lot about how you approach your work. And if you stick with it as long as I did and my peers in college did, you really you effectively start like professionalizing the athlete mindset.
What's the correlation?
The correlation, yeah. So it is at first just kind of like basic professionalism. So when you play in like a high school sport, like it's still pretty fun. Like there's levels. Maybe you're the varsity, you're junior varsity, etc. But when you go to college, it's people's livelihoods. Your coaches are full time coaches, and if you don't do your job, they could get fired. And that kind of pressure really kind of changes such that now you are showing up to your meeting on time, you're showing up to your lift on time. If you do not, and you're not trustworthy, you're not going to see the field. And so that's kind of that was the first like proper professional experience. Show up, be on time, be ready to go, lock in and get the job done. And then I think what's so different about athletes than your standard professional is like there's not a soft way to say you messed up on the field, right? Like you usually know it. When you do, like unless you're far and away better than all your teammates, you're going to sit. Like, it's basically like you get fired play to play in college football. And if you don't do well, there are usually 3 to 4 people behind you who then get the next shot. And if they become better and more reliable than you are, you're out of a job. And that is the other part. It's not just showing up, but it's performing when you do show up. And I usually see that mostly among peers who have athletic backgrounds as well.
But let's say, for example, right, you were to draw a parallel, right? Is it maybe the discipline, or is it maybe more in terms of the uncertainty? What is it that maybe trains you essentially? A performance, I get it. Like there is a certain amount of expectation that is set upon you that you have to perform, otherwise you're no longer on the team. But in terms of day-to-day activities, is it more in terms of discipline? Because I think performance is maybe an outcome, if you were to put it, whether it's an outcome whether you stay on the team. But in terms of what leads to the outcome, right? What compounds to it? What would you say is something that maybe you drive? Is it the discipline? Is it something the strategy, execution? What exactly is it?
Could be all those things. I think for me, it's the process of performance. Like you get 60 minutes on Saturday to play your game. But if you only show up for 60 minutes and that's the first 60 minutes you show up for during the week, performance is guaranteed not to come. Your performance is a function of the months of training, the preparation for that week, the time that you spent in the gym, if you had injuries, kind of working through those things. And you don't get, there's nobody cheering for you to go into the training room and get your ankle taped up. But you know what, that's 20 minutes out of your day. You need to wake up early, you need to be there on time, you need to get those things done. And I think that the really understanding that connection, and I wouldn't even call it correlation, like there's a causality to that preparedness. That's what I think is special. And that's at least kind of what still sticks with me.
Were you thinking that as a professional career? Did you ever think that you'll probably pursue it to be?
That became abundantly clear to me. That was not in the cards quite early. There are people. When you get up to higher levels, you start to recognize who has that kind of runway and who doesn't. And for me, I was quite at a fairly early age. I knew like, hey, this could be a big part of my education. This could kind of really bring me to a great school, all of which it did. But I played with some of those people who did have that potential, and when you know what you're doing, you know what they're doing, and what they're doing is just they've got a different ceiling than you do. And I always knew I was very far from having that ceiling. So I never had illusions of delusions that I was going to be a full time professional athlete.
Did you ever think that you were probably going to be a VC? Was it ever around those ballpark during that time? Did you ever think that that was there down the line?
Yeah, yeah. So VC, I stumbled into startups out of undergrad in operator roles, largely in sales and marketing, and more towards sales than marketing. And I approached sales. It wasn't just like about like putting the numbers up. Obviously, that's a big part of it. But for me, I kind of understood like there's this like fundamental truth to startups, and that startups do two things: they build things and they sell things. And if I could get really good at one, I would always have a career and always have a job. And as I followed that kind of big question, how do startups sell things, from a kind of hot startup to Amazon to a startup nobody ever heard of, um, I really fell in love with the deal making process. And I thought like this is where I want to be. I want to kind of find buyers and sellers and connect them. And I knew I kind of had a natural proclivity and a talent for it. And as you've kind of gone through and you've closed your bigger deals, you start asking like, what's next? What's bigger? And there are people who sell products for a lot of money. They almost always are doing smaller deals than people who are buying and selling companies. And so that was the first kind of like aha, like there's a game that's being played above the game that I'm playing, and I should go and figure that out. That really inspired me to go to business school to just kind of understand a little bit more of that game beyond the game. And as I got there, I recognized like there are many flavors to this buying and selling of companies. Are you doing, big time M&A with public companies? Are you doing, kind of like a private equity in like more of a mid-market space? And what I found is like, I'm very inspired by the bigger deals, but I still love the startup part. And like, as that kind of became like clear and focused, like I know startups and I want to learn bigger deals. That's where triangulated to VC. And that's it. It was really kind of pulling. Those were the paths that kind of brought me there. I'd say, Srivatsav.
Would you say that like maybe you're investing because you understand the game better, or is it because you like to be a part of either product or sales? Is it like if you love products, is that why are you investing, or are you investing because you're good at the game?
I think every investor kind of comes with a native language to the table. I think that there are some investors that have been incredibly successful as like product people and builders of products. Like, I don't know. I mean, he's Mark Andreessen could fall under this, right? He built the first web browser. He was a proper product guy. But there's other people for whom it is selling. Don Valentine from Sequoia was a sales guy before he got into this, and so I think that's your native language. And I should mention there are other folks who they come to this with like a proper investor background. Maybe they were bankers that came into this, and they kind of see all these kind of different perspectives. You see things a little bit differently. So for me, I do still think sales is kind of my native language. I can sit down with the founder, ask a couple questions. How'd you find your last couple deals? What's the sales cycle? Talk to me about your ICP. Those are That's for me like the quickest way to get a picture of how healthy this business is. My partners, one of whom is an engineer by training, like talk to me about how the architecture works, and he gets kind of a similar take. It's very different inputs, but he's kind of coming to the same conclusion by a different path. So um, I learn more about product every day. I learn more about investing every day, but like your native language is your native language. And you do kind of, I at least think that every investor, depending on kind of what perspective they came from, they are translating to that native language to make kind of the best decisions that they can.
How many partners do you have? I think you bring in the sales side and then one person from technical, and then just
So we
two.
have, yeah, three total people.
Okay.
And actually we have, if those are the legs of the stool, someone with an investor background, engineering
Okay.
or product background, or a sales background, that's how we're represented across the three partners right now.
Perfect. So Bob, let's just maybe dive into like the bigger picture of like how do you size the AI market today? Because I will give you some numbers that it's just I don't know how to look at these numbers. So about 300 and 370 billion to 200 billion is the amount of money that is currently being invested. Right? If you take infrastructure out of it, it's around 370, and then if you maybe add in infrastructure, it's around the 200 billion. Is it a fair evaluation of how much is being invested?
So I don't have actually the back numbers on the investment. I was doing some writing on my blog. The aggregate valuation is something around like 3.5 trillion. That's been kind of invested in, that you could say is like attributed to AI companies in the private markets. Now, um, definitely a number that deserves double clicking on, and I might not even be quoting my own research that well because it's not in front of me. But roughly 2.8 trillion is what's wrapped up in OpenAI and Anthropic. So I think the bigger question is like, are those companies actually that valuable because they're representing such a huge amount of that, at least in the private markets? And then, Shrivastava, when we get into the publics, it gets a little bit harder because now we've got to like question like, if NVIDIA has grown this much since GPT came out, how much of that is attributable to AI? Well, for NVIDIA, a lot of it. Other companies like Microsoft or Google, a little bit more, a little bit less. But the question kind of gets even more complicated when we start asking, like, well, how much is being priced into the value of things like power providers? So it's tough to say right now. The real reason, the simple reason to say it's really hard, is because so few of the pure play AI companies are actually public. So there's just a lot of investors who want to be in on the AI party that are you know speculating, frankly, is the way to say it. They're speculating on the value of AI right now. So I don't know. I think it's really flexible. It depends on, good news, bad news. It could blow up, it could shrink down. But I would say 3.5 trillion in the private markets. Let's say double that if we include the AI shine that's being given to public companies that have some sort of connection to it.
Yeah, I agree. I think you're very close to the number. I think so. What I kind of found out was that if you were to take maybe the infrastructure layer, the application, and then maybe all of SaaS and services together, it's about 3 trillion current at the current market valuation for this one. What is this being invested on? Because the average SaaS returns, let's say for example, if they're having X amount of revenue, it's about a 6x their valuation, right? On an average, so let's say a median would be 6x would be the valuation. But why the 21x, 30x? Median is around 12x, and some high ranges are about 20 to 30x. I understand that AI as a technology itself should exist, right? Because that is something new and it should exist. But what are they investing on?
I mean, it's speculative mania is really what I think. Like a lot of investors will say, oh, it's, there's an underlying whatever. Like, no, man, it's like there's nothing to justify that right now. I think that it is super exciting. It is super disruptive. And for lack of hard concrete numbers on how valuable this thing is, we've been bidding it up. And there's a case of like, well, the next idiot keeps buying it. And so it keeps going up. There has not been a market correction to happen here. Now, again, why is that? If we think about this, how much AI is actually buyable and sellable in the public market? Not that much. We're buying for, Microsoft is a player in AI. Google is a player in AI. Power companies, they stand to gain from AI. But the two companies that represent AI right now are OpenAI and Anthropic, and the private markets are not able to vote up and down on them. That's why it's speculative. That's why we're all guessing. They have a bad day or they make a bad choice. The whole value of AI shrinks. Now, I think that those companies are very overvalued to the point of anywhere from like 30 to 60% based on some of the decisions that they're going to make. When that happens, when they do hit that public market, all of the AI shine and the bidding up that has happened in both private and public markets ought to be corrected accordingly. And that is going to be pretty painful for people who have capital in these companies right now. I think that it is going to happen. I think that when we do finally open up the books on these companies and you put an army of Wall Street analysts to figuring out exactly how valuable they are, you will see some price compression. And this is quite unprecedented, not just because AI is such an innovative and disruptive technology, but because companies have been staying private for longer and to valuations that have never been considered before. One of my favorite people to read and listen to in VC is Bill Gurley. And he was complaining about billion-dollar startups back with Uber, talking about how the lack of exposure to the public markets means that this kind of management is going unchecked or unaudited. It's only what, 12 years later, and we're talking about trillion-dollar startups. So like the mechanisms and how, like the rational assumptions around markets and efficient markets, throw them out the window. We are not there right now. I
Are
think
you guys
that's
currently investing in AI, or are you
absolutely,
waiting? You are.
absolutely. So here is the, the two ideas you must hold in your head at the same time. This is absolutely the most foundational technology that's going to, shape our lifetimes. 100% believe that. Is AI as it currently traded overvalued? Yes. Do we have even an idea of how deep the penetration on AI is going to go in our society? No. The kind of academic thinking and it's very hard to project what is going to happen. But there's one economist that I really love that I've yet to find her wrong. Is Carlotta Perez, and she does she's done research on the history of financing innovation, and what she looks at are speculative bubbles around technology, railroads, fiber optics. They follow a similar pattern where there is what's called the installation phase of the technology, where there's a lot of hype, there's a lot of excitement, valuations explode without like a clear idea of what the cash flows are actually going to look like. When that installation phase ends, this is when the bubble pops. But while that bubble was inflating, so much capital was coming into the products that things like infrastructure gets built out. So, like your railroad mania led to tracks being laid all over England and the United States. When the bubble collapsed, there was cheap rail travel that was available to everyone. And that's when the deployment phase begins, wherein now we're actually changing how the economy operates around these things. So, in that context, as an investor, you can think that yes, the bubble is going to pop, but one, there will be companies that survive and do incredibly well that live through there. Amazon survived the .com bubble, right? Great company. You bought Amazon in '99 and you held. You'd be taking the Zoom call from a great beach house right now, right? So just because the bubble pops doesn't mean all the companies are gone or go under. And furthermore, like to understand what this will look like in the deployment phase, you have to be on the pitch right now. You can't just say like, okay, I'm going to wait for the bubble pop and then try to get in. You got to be playing right now. And it will come. I don't know if it's 2 years. I don't know if it's 20 years, but that's just the nature of capitalism and funding innovation.
But do you strongly believe that there's a bubble?
I think that it's yeah. So I think like it is beyond the question. Like if we're disciplined and we're defining a bubble the way that Perez would, absolutely. Like this is part of the cycle. It's not a pejorative to say like, oh, it's a bubble. It's not saying that the technology is not valuable. It is describing how capital flows into new yet unproven ideas. And there's a couple you can trace it back through many of these things. I am a student of history, and I think that while this is an unprecedented rise, um, it rhymes with what happened in the past. So yeah, it's a bubble, but that doesn't mean like I don't believe in AI or I don't think there's value in AI. It just means like that's where we are in the funding cycle.
Right. I agree on that one, but I think with maybe when you take Amazon, let's say for example, right? And then maybe it's like one or two, three companies that kind of survive, right? The .com bubble. But how do you define the characteristics of a company that is there today? What is AI? Every company's website probably says AI native. Maybe if you have to put it, only few frontier labs are there that kind of lead the AI wave. And what do you think are the characteristics of the company that is going to survive the bubble?
I mean, they need to. Yeah, I mean, tough question. So I mean, look, I think that right now it looks like an open AI Anthropic future is pretty likely. I think that to use an analogy, like they're kind of the motor within many of these different AI companies. So, I think that they may be the first and second mice to the cheese, and I think they're going to last for a while. Even if if they get a 60% haircut, they're still what, $500 million companies, $600 million companies. It's not like they went out of business; they just got corrected. So, their command on compute, on talent, that's a pretty durable advantage. I think there's the question is like how valuable is that advantage, and that's whether they deserve a 40x multiple or a 15x multiple, and that's still to be decided by the market. So I don't think those guys are going anywhere. I think that they're just going to get a correction. I do think that the companies that are going to survive, when we look down, um, they're the ones that are going to become. I think it's labor replacement.
Right. Because I think if you take a look at the bottom of the, maybe if you were to put it in terms of levels, right? The chips and infrastructure is the last thing that is going to go, right? Because that is the ecosystem that kind of supports everything about it. And then we have the frontier labs, anything that's OpenAI, Grok, Claude, all of those models. I'm talking about the ones that are either a wrapper or maybe the ones that sit on top of it. Like maybe the last thing that would probably go is OpenAI, Anthropic, and so on. But what are the companies? But you're investing in the product companies that sit in the third tier, right? In terms of the
Yeah,
ones that that use frontier models. So I'm talking about those ones. When you're investing in them, what do you look for in those companies that you feel that even if the bubble pops, I think we should be good?
yeah. So I don't care about your AI feature. So like if we I care about the workflow that you're able to replicate and obviate, and if you can do multiple workflows, you might be able to replace labor. historically companies have spent a very small amount on software and a very large amount on labor. What is really exciting in particular about agentic AI companies is agentic AI challenges the core assumption of human execution at the heart of all economic activity. This was, for example, your SaaS products. Well, this was a per seat license. How many humans are using the tool? An agency, you're a marketing agency, fill in the blank agency, typically charge an hourly retainer, which is based off how many hours a human is doing this. We can break that down because the agents are getting better and better, and they're starting to kind of consume or subsume. I don't even know the right verb for this, but like they're basically able to replace humans, starting with junior folks, and now in some cases we're hearing like even like mid senior folks are getting replaced.
Correct. Yeah, because I think our history will probably fail us here in terms of giving us maybe guiding points in terms of how to navigate this. Because I don't think there is anything that has kind of taken the cognitive work off of our hands, right? I don't think there is anything that has been done so far. But if we were take it maybe to
Hold
take
on.
AI right now for this, okay, you have a counter. Okay, go ahead.
So cognitive work. 10 years ago, we would have said cognitive work involves going into, a CRM system and engineering new pipelines for your data, right? That would have been cognitive work. Software was cognitive work, right? Like this is coming. It has already started to come for cognitive work, and it is coming for increasingly more cognitive work. I think that, if you could have been a knowledge worker that just operated a couple tools all day, and you could have been worth several $100,000 to a company. You've got to be more than that now. That's it. One, it's scary if you're comfortable logging in and working your spreadsheet and logging out. Like, yeah, sorry, like your job's getting disrupted the same way that like people who put shoes on horses in 1900 did. That's part of innovation, right? Like skills become obsolete, skills become devalued, revalued. um, but these agents are coming for what we were calling knowledge work a couple years ago. Like it's here, man. I don't think the right question is to say like, oh, what is protected. It's about saying like, okay, how can I bring the ineffable qualities of being a human, apply them at the pace of AI, and make myself, more valuable. It's a selfish plan for labor. I don't have like a across the board workforce solution for you, but knowledge work is in jeopardy. It is in jeopardy, is what I would say.
But I think I agree on that, right? Because I think most of it can be automated. Forget about AI, maybe, right? Most of the work can be automated to some extent. And when you add maybe AI on top of it, where it kind of removes most of, let's say, pattern recognition, decision making, reasoning, to some extent. So you're saying that the companies that bet on that and kind of go towards uh, having human labor and decision making replaced are the companies that are going to survive. Is that the current bet?
I see smaller, nimbler companies, is what I see. So historically, if we wanted to go far, we had to go together. And going together requires a lot of coordination, which tends to require multiple layers of management. That now I can, basically have four junior workers that, I can say, hey, you go find prospects, you go make a social media campaign, you go write copy, you go send emails. I can do that all myself when typically that would have been four people. Um, I still sit at the top of that pyramid. There might be some model that comes and eliminates me and gets to the next smarter person up. Um, I don't think that that's going to happen as much. And if it does, what are we left with as human workers? I think that the premium is really going to start coming to relationships and real conversations and things that are maybe a little rough around the edges, but they feel human. Like, I think that we have like a very deep demand for that, and when AI tries to kind of step over the line into that stuff, that's when uncanny valley happens, and people reject that pretty quickly. So I think there might be some, is that the distillation of the soul? Like I don't think AI is ever going to have that, and I think that's something that, if you're a human and you can cultivate that and really focus on connections, I think that's probably one of the more defensible skills. And the other thing is like, again, this is like, no one in the world chooses careers for the world. Think about yourself, be selfish in this, and just recognize it. Like, look, if I can cultivate my agent development skills alongside that kind of personal connection stuff, there's always going to be a spot for me. And if again we assume there is some efficiency in markets, people will move towards that. So look, it's going to be painful. Every one of these innovations, and when a bubble pops, like, people lose their jobs, people lose capital. But what is losing a job? It's really just changing a job over time. And I don't know about you, Srivatsav, but I've worked some pretty bad jobs in my life. Some things that I really hated. Some things that, like right now, I told you, at the top of the call, like, I'm working 12-ish hours a day because I'm doing things that I really like. But I've worked 12-ish hours a day doing things I really didn't like. There's a lot of jobs out there, and I don't know why we're trying to hold on to those, because a lot of the things that I've seen AI are good at are like taking away the terrible parts. If your 8-hour day could be a 2-hour lunch where you got to go and meet people and talk and make a connection, because that's what AI can't do. That sounds like a better life to me. And we can have better lives.
Agree. I think AI is more built in terms of general purpose, right? But when you talk about companies that kind of cater to whether enterprise, B2B, B2C, any of those things, the ones that kind of survive, I think what you said was not only one function or a feature that it kind of does, but it does in terms of the layers of an ecosystem, right? Where how can you kind of not replace them is probably not a right word, maybe aid them, or maybe take away the boring tasks, is probably, I think, a good way to put it.
All right, let's play it
How
out. Tell me,
does
what's the company? What's the company we should think through for this? Who,
Yeah,
who do
just
you have?
I do want to take an example, right? Because I think, let's take for example, uh, let's take Amazon for example, right?
Great.
So let's
I
say
work at Amazon.
Amazon, right? And let's take what they do as a company. They were able to get to where they are without AI, right? And I personally think that AI should not be incorporated as a forceful means of just incorporating it, but as a means to improve maybe an experience, or maybe uh, increase it in certain ways. Unless and until it's necessary, you wouldn't probably kind of add it. So I'm saying that these companies will survive AI bubble whether they're going to pop or not, because they're not. It's not that they're not participating in it, but I think that they don't really. They're not going to go anywhere. But I'm talking about companies. Let's say, for example, there's a company that does. We're going to give you maybe a legal services. You can ask any legal question here, right? You can maybe mention some names, but let's say if there is something that comes under vertical AI, but if the incumbent model that they use, let's say Anthropic is probably going to release a product that does something similar. Don't you think that the company itself is probably not going to have a moat? That maybe if you
Yeah,
talk about something
services
that doesn't.
services companies have never really had a moat. The whole way the services companies work is I work harder than everybody else and I do a little bit better than the next guy and I keep winning contracts. It's always been that way for services. That's why services don't get more than like a 1.2x multiple when they get traded. Even if you have some brand cachet like a McKinsey, they're never going to get a 15, 20x multiple. Like that's always been the case, is what I'd say. So like with a service, what am I paying? I'm paying to get a job done. If I can get the job done for just as well for less money, that's always going to happen. Like that's just, like we go back to like supply and demand microeconomics. We see our prices shift, like the supply of good work expands. We're going to pay a lower price for it. So like that's going to happen. The other example you dropped, Amazon, like, yeah, Amazon was made without AI, but they're one of the first companies to involve robotics. You know, think how many people aren't working in their warehouses now because they got Kiva robots running around. So, like, this is the pace of technology. There was a time when all information and knowledge work was done on pieces of paper, and you had thousands of people who were, recopying notes or typing things in. Like, those jobs are gone. There used to be switchboard operators on telephones actually plugging connections in or out. Like that got eliminated too. Like that's change, man. Like and with each one of those innovations, the global GDP expanded. The pie got bigger. And you know what? And there are more jobs now than there were then. And we're actually even seeing this. We're seeing software engineering jobs go up, even though this is thus far in the AI revolution, far and away the most disruptive knowledge work. We need more engineers. So I think like it's a little bit of doomerism that is quite valuable to people who are in eyeball businesses, whether it's TV or newspaper. I think your economists might have a different take on what's actually happening.
Right, and I agree on that. See, the thing is that in terms of labor force, I do agree on that. But I'm saying that if I give Sean two products, right? Maybe I give you this Claude as it is, and then I give you a product that is maybe very specifically designed so that you can ask it any questions about anything from the law, right?
Mhm.
And then I'm just saying that if Claude builds something on their own that is just something similar to that, don't you think that the company who does only that will lose it? Because
Oh, so you're
the
saying if Claude comes into your vertical?
right, it's because
Oh yeah,
they are general purpose right now. But if you take a look, for example, they are into fintech, right? They're
yeah, you're
servicing most of Wall Street's enterprises. So I'm talking about that is the one, right?
you're
So
cooked. You're cooked.
right,
Aligned. 100% there. So, as an investor right now, what you have to recognize is like there's kind of like a sweet spot in TAM for these things because if the TAM is really big, for example, we're going to eliminate Excel. Claude and OpenAI are probably going to go in. They're going to want to win that, and likely, even if they don't have the best idea, their balance sheet, the things that they have behind them from a resource capability, they're probably going to win. We're $100 million fund. I'm not gonna be able to go and juice up a company to go up against those behemoths. But if we see something like I was reading about a company yesterday that's doing like a combined agent of, like system of record and system of action for HVAC, right? Like this is a highly specific workflow. This is a market that was basically skipped over by the last generation of SaaS. You can go in and you can win that market. Now, is it going to be as big as Salesforce was? Probably not. But if we manage our valuations, we come in at the right entry point, and we help that company go from say $2 million a year to 50 to $100 million a year. That's a really good exit as a VC. So yeah, you're right. You do have to be wary. Like, am I going at a TAM so big that I could get swallowed by the LLMs? I do think about that a lot.
another question. 2025 healthcare was about 9 to 10 trillion, and this is the overall market, right? How much
Mhm.
market they kind of hold. Healthcare is about 11 trillion around the globe, and enterprise SaaS is about 500 billion, gaming around 200 billion, and maybe robotics into 26 billion, right? Total overall market. Maybe I don't want to be quoted on the numbers, but just 1.4 billion went into AI investment in healthcare. That's maybe like just a small fraction.
Mhm.
What is your take on this?
So it has to do with the regulated industry. And so I'm speaking from a U.S. Centric view here, but banking is probably another massive industry that you would see less AI going into it. And there's a couple things. One, there are in some cases explicit limiters on how well you can deploy automated decision making. So, for example, I was with a fintech fund for a little bit during business school, and like while a machine learning algorithm looks like a perfect thing to kind of offboard loan approvals to, you have to be able to explain every part of a decision process for people who get rejected. So, a bank is not going to adopt an unsupervised learning model to make its decisions. So there may be regulatory restrictions around actually deploying these things. And I think what's a more real force is if you are a lifelong employee of a regulated industry and you make your way to the C suite or even just a budget holder level, you're pretty okay to watch people stub their toes. You want to be a second or third follower in those spaces. So there's a ton of potential. There's a lot to be unlocked there. It is harder for a founder to go in. Like, you can't move fast and break things in healthcare. People die when that happens. You can't move fast and break things in financial markets. That's when financial collapse could happen. So part of it is just like there's lower hanging fruit everywhere. If I build a better way of writing software code and I'm in Silicon Valley, there are thousands of startups who can try it tomorrow. And it's like, go where it's easy first. So I think it's a function. I think what you're looking at is regulatory capture at play. If you can verticalize and build solutions for those sectors, like please give me a call. I want to invest in you. Because when you do it, you're able to work through those restrictions. Those companies have really durable margin capture.
Yep, yep. What does Shane look for in an entrepreneur? Is it the Shane invest in the entrepreneur or the venture?
Good question. The right answer is both. I think that you need to think about startups. There are multiple things that startups can control for, and they are all factors. Factor is big because it implies multiplication. If you do not, if one of the factors of a good startup between team and product and market, if one of the factors is zero, the whole equation is zero. So it's pretty important to keep an eye on knowing where the relative strengths are and the relative weaknesses are. But if you have an absolute weakness, zero to a negative, the whole equation doesn't pencil. Now, some of the things that I have been thinking about, and this really comes from operating more. So, as a half of my day, I'm investing, half of my day right now, I'm operating with some of our portfolio companies. And, just kind of being back in startup land, like, leadership is probably the skill that's in the shortest supply in startup land, and it's probably true across the board. And I think like good leadership is not a sufficient condition for a startup to succeed. You can have a brilliant background, maybe you're a military general and you come in and you are a brilliant leader and you come and you start operating a startup. That's not sufficient that this thing is going to be successful. um, Bad leadership is a sufficient condition to fail. So you might have all the other things, but you have bad leadership, and that startup's not going to work as well. So it's I think that the earlier you are, it's more important to bet on the entrepreneur than the idea, because the idea is going to change a lot. But that kind of factor based model, I think, is kind of, now that I've been doing this all day every day for roughly about a year since I got out of business school. Um, I think of that the factors more. And if anything's zero, the whole equation zeroes out.
Right, right. Because I think that somebody who probably understands distribution would probably be a better entrepreneur than a product-led entrepreneur. Because I think when you're obsessed with the product, you kind of want to iterate towards the product. I think the bigger problem is kind of distribution. How do you distribute the product, right? I agree if it's a good product, but how do they know that the product exists, right? You probably need to have a very good distribution pipeline. What do you think works in distribution, in B2B distribution?
Yeah, man. I mean, so like, when we go back, like, my native language is still go to market. And so for me, distribution falls underneath that. And, are we a SaaS? Like for a long time, distribution was how do we get our software out the door? Now we're getting more appetite in physical hard products, and distribution then kind of implies things like supply chain, logistics that make it much harder. Um, Look, a product is like, you don't have a product to me, like, who uses this, what do the customers have to say about it? That's the most important thing, because typically a very good product is made by an entrepreneur or an engineer who has some type of proprietary insight or proprietary access to those customer problems. The world to me is just a lot easier to unpack from customer pain points than it is from like product opportunities. And like, maybe some people are better equipped to do that the other way around. But like, yeah, distribution critical. And the most important part to make distribution happen is that you're solving a problem for enough customers that it's painful enough that they're gonna get it. So, look, I don't invest in pre-revenue companies. I don't. You haven't done your job. Like, that is part. Founder is the hardest job in the world. You have to be an engineer. You have to be a salesperson. You have to be a fundraiser. You have to be a manager. You have to be a therapist. You have to, take out the garbage. Like, that's back to the factor model. If you're pre-revenue, that's a zero, and your company's zero for me still. I want to be able to understand how you got that first dollar in the door, and that is the best ingredient to understanding the full recipe for how this company gets big and makes a lot of money. So yeah, man, distribution, totally. I'm not going to sit here and just fall in love with a product if I don't see who's going to buy it, how they're going to buy it, what they're going to pay for, and how you're going to get it out the door.
If you're investing in robotics and healthcare or anything that is deep tech or vertical AI, you're not probably going to see revenue until maybe even Claude is able to see. I mean, Anthropic is able to see it after 5 years, right? So you invest in those companies that is like, let's say they are in robotics, they are in deep tech, but they don't have revenue. There are no revenue, not even pre-revenue. Do you invest in those?
Um, Typically, no. So there are investors that are going to invest just based off of the potential of the idea, and they don't care about revenue yet. We're usually coming in when there's customer validation, typically by dollars in the door. If you can at least introduce me to a pilot person who's used this and can tell me about how good it is, like I'm not going to kind of go to the next level here. But like let's apply this to robotics. Let's make this more real. So one of our far and away best investments is a robotics company. It's called Batrista, Botrista. Go check them out. You're going to say, Shane, what are you talking about? This is a robotics company. It looks like a refrigerator. What does Batrista do? Batrista has a proprietary automation solution where you can put a cup underneath the nozzle and it can make a boba tea. It can make a fresh blended drink. It could, take all these different inputs and make crazy new beverages for people. Now, oh man, I've got a cappuccino machine in the basement of my building. I live in a luxury building. This is different than that. There's actual proper engineering that goes into the right way to mix solid and liquid ingredients. There is an AI component. There are many semiconductor chips in this thing. It is a robot. It's not going to fold your laundry. It's not going to, fill in the blank what I thought about sci-fi, but this is an incredibly valued robot because each time, what you were able to do, this hits directly at the labor replacement thesis, such that if I work in a quick service restaurant, so Jollibee Foods is a big investor in these guys, and they're blowing up all over Asia because Jollibee Foods probably needs to get an employee from, signed to their contract to adding value in something like 12 to 15 minutes. There's incredibly high turnover. If only one person in the company can make a milkshake and they leave, you've lost a high margin item from your menu. This reduces that risk for these operators. There are millions and millions of those operators around the world. That is a robot, and that is a viable robot. And those are the ones that we invest in. And if you think about right now, where do most of the eyeballs go for robots? They go to things like humanoids. I'm seeing a lot of like, this is going to clean your house for you. Well, let's think about house cleaning really quickly from this labor replacement frame. A housekeeper probably has 8 to 10 tools. They've got something to clean the windows. They've got a broom. They've got a mop. Each tool implies different context. Each tool is part of a larger process. You don't clean the floors before you clean the counters because it leaves a messy floor when it's done. That context is all held within a human operator who's orchestrating between these different tasks and tools. It is actually a quite complex problem if you tried to recreate that with code. And here's the kicker. In the United States, most housekeepers are going to make about $15 per hour. That's not a super big prize. So when we kind of put what I think of as like the 2x2 matrix for investing, and I don't know if my camera is going to put me in the right quadrants or not. The bad quadrant where you want to be in, high context switching, low labor costs. When we want to get up into the good quadrant, these are things with low context switching and high labor costs. So I am less interested in robot housekeeper and much more interested in robot pipe fitter, because a pipe fitter gets paid $200 to $300 an hour, and they're mainly loosening and tightening bolts. That's good labor replacement math. So like the robotics game, it's not going to happen all at once. And like maybe Optimus comes out and it's the first humanoid to hit the market. There are many, many other places that robotics can be applied. They can be valuable, and they're going to return now without having to have 15 amazing breakthroughs happen. So think about the labor replacement costs, and robotics becomes a much more investable space.
Perfect. Super. Thank you, Shane. I don't think I have anything else, but I think that was very interesting. We'll have maybe a second session on this. I have a lot of more questions follow up on that.
Thanks so much for having me today. It's been a great conversation, and happy to do this sometime again. Really good chat.
Yep. Yep. I saw the portfolio of your companies that you were kind of in. You're in a lot of distributed space that's probably betting on